What are stocks? To put simply, a stock refers to a share of ownership of a public corporation. It symbolizes a claim on the company's assets, revenues, and voting rights attached to the stock. Another name for stocks is shares or equity. Owning a stock enables you to have a limited liability on the company, and you'll not be responsible if it cannot pay its debts. Stockholders usually profit in two ways: trading on their stocks, and when they are paid dividends, payments given on a per-share basis. Different types of stocks. A. Common stocks. Common stocks are the most common. For example, stocks tracked by the Dow Jones Averages and the S&P 500 are common. The worth of these stocks rely on how they are traded at any given time, and they usually bring more returns than other investments. Holders of common stocks have the right to decide on the activities of the company, such as choosing the board members. B. Preferred stocks. They symbolize some extent of ownership in a corporation, but normally not accompanied with the same voting rights. Preferred stocks are seen to have similar characteristics to both common shares and bonds. Their worth fluctuates depending on the common stock price of the corporation. On the other hand, they are similar to bonds, since stockholders are often guaranteed a fixed dividend forever. How stock trading works. The trading of stocks usually takes place on exchanges, which are either physical or virtual places where traders bid on shares of stocks. The stock market acts as the meeting place for buyers and sellers, or traders. Thus, it lowers exposure to risks while investing. Traders who perceive that a corporation will be profitable in the future bid the price of its stocks up. On the other hand, traders who perceive the corporation will not be profitable in the future bid the price down. Sellers strive to get the maximum price possible from every share, while buyers look for the lowest prices so they can maximize their profits later. The advantages of stock trading. The returns on investment from stock trading beats those of other investments like bonds and commodities. With the emergence of online trading, you can participate in the stock market from anywhere, anytime. Access to low commissions. Stock trading offers complete freedom for your investment pursuits. There is no investment limit required. Availability of a wide range of company shares to choose from. The disadvantages of stock trading. You risk making losses if you trade incorrectly. Brokers usually charge some fees for using their services. You may lose your investment if the company is declared bankrupt. Types of exchanges. A. The New York Stock Exchange, or NYSE. Founded in 1792, the New York Stock Exchange is regarded as the biggest equities-based exchange in the world. On this exchange, trading is carried out face-to-face on a trading floor. At present, the New York Stock Exchange is the market of choice for leading corporations in the U.S. B. The NASDAQ. It is an over-the-counter, or OTC, market that does not have a central location or trading floor. Contrary to the New York Stock Exchange, the NASDAQ handles all its activities electronically. Several institutional traders like pension funds and mutual funds have a preference to this type of trading. C. Other exchanges. The American Stock Exchange, or Amex, is the third biggest exchange in the United States. Other stock exchanges are found in nearly every country in the world. The movement of stock prices. The price of stocks usually experience constant fluctuations because of market forces, that is, changes in supply and demand. If more traders want to buy a stock, or demand, then sell it, supply, then its price will rise. In this situation, the company has a perceived good future. It's worth mentioning that no theory is fully sufficient in explaining the movement of stock prices. The price movement of a stock represents what traders feel about the performance of a corporation. The earnings of a company, whether it is making losses or profits, is what dictates traders' valuation of a corporation's performance. Traders can also use various technical tools to forecast stock prices. Eventually, the movement of stock prices depends on traders' sentiments, attitudes, and expectations. How to read a stock table or quote. Columns 1 and 2, 52-week high and low. Column 3, company name and type of stock. Column 4, ticker symbol. Column 5, dividend per share. Column 6, dividend yield. Column 7, price-earnings ratio. Column 8, trading volume. Columns 9 and 10, day high and low. Column 11, close. Column 12, net change. Conclusion. Investment in stocks can be a profitable venture if done well and according to the rules. Before you start trading stocks, you should ensure you master the basics to avoid future regrets. Start small and increase your portfolio as your skills and experience become better. Invest wisely. Think about the old stock market saying, "Bulls make money, bears make money, but pigs just get slaughtered."